Hello, everyone, and welcome to the webinar. My name is Mike Angelo, and I'm one of the managing partners at Nimble Capital Group. We're so excited to bring you this opportunity. This project is called the Villas on Rodeo. It's located in the city of Casa Grande, Arizona. And whether you say Casa Grande or Casa Grande, it's okay, but I'm going to probably intermix those two, but just south of the Phoenix MSA. So let's dive in. This project, just like any other investment opportunity, there are disclaimers, so please be sure to read those disclosures at your leisure and reach out to us if you have any questions. This is a 506C investment offering for accredited investors only. The Villas on Rodeo executive summary breaks it down and gives you the high levels, I should say. Located again, as I mentioned, in the Phoenix MSA, just the southern portion of about 45 minutes or so south of Phoenix proper. This area, this market, this submarket has seen a tremendous amount of investment in the last 2 years. Over $5 billion just from a handful of companies have put their facilities, manufacturing plants in this area. And so there's been an explosion of population growth, increases of median income, and of course, a major lack of housing, which is where this project really fits in. Our sponsorship team has over 30 plus years of development experience, $120 million plus in assets under management, and 2,000 units currently under management. So the team has developed 6,000 plus units, developed and managed over the 4 full cycle projects in the value add space, produced a 30+% AAR for our investors. The exciting thing on this project, where we've already underwritten it very conservatively, but we've projected 0% rent growth for the next 3 years as we build the project. We've added 1 full percent or 100 basis points in cap rate at sale. So as we calculate the valuation into the NOI, we've added a full percentage point in cap rate. The other really exciting part is, as we acquired this at a slight discount last year and worked to entitle it, we've already added $1.5 million in equity into the deal. So just coming in now, you already have a very nice cushion in equity in the project before it's even built. And that's because the land acquisition pricing, but also the entitlement work that we did at our own risk over the last 9 months. So limited partner returns are projected to be about 40% average annual returns, and that's a 2.2 equity multiple. Pictures are worth 1,000 words. So let's take a look at these fantastic renderings that our architect Base 4 put together for us. You can see here it's 2- and 3-story buildings. Walk-up garden style is what this style of apartment is called. You're going to have awnings near the area. You're going to have garages in the back that will be available for an additional income. Pickleball courts, outdoor amenity area for the kids, pet park, of course, pool area. So we're really excited about what the project is going to be. This area looks blank here, but there's actually single-family homes on this side, and this is getting turned into a condo development. So lots of growth in that area. Indoors, again, you'll have a gym. A leasing office will be available with some indoor entertainment space as well. This is what the site currently looks like. You can see here looking north, Phoenix is here about 45 minutes or so, located right off of Pert Road and Rodeo. The McCartney Road exit is the I-10 exit, so it's the north part of Casa Grande. And again, I mentioned this is a condo development. These homes have already been built. These are some homes that have been there since about the early 2000s. And then this site actually just got approved for a 200-unit build-to-rent community, so single-family homes but rental. So there's a lot of growth. A lot of other developers have looked at this area and are now starting the work. The good news that you have on this project is we're just a little bit ahead of these guys, so our project should break ground faster and be able to be built faster. So we'll take advantage of all of that pent-up demand. On the site plan side, so now looking down onto the project here. So here's, again, Pert Road and Rodeo. This is the commercial space in the corner. About 9.9 acres of it will be the multifamily point. You'll have access points here on this side, access point here, and of course another exit here for fire. So you have 3 exit points, and as I mentioned, there's 8 buildings. The biggest piece that's really exciting is we spent the last 9 months, as I mentioned, entitling this property, entitling this land. It was previously just zoned commercial. So getting through the city and all of the entitlement work, one, we invested our own capital to be able to do this, put our own capital at risk before we went out to investors to know that we can actually get this project built. So that's the big piece is we've de-risked this piece of the project by entitling it, meaning it's approved and shovel ready for construction. So the next step is getting construction documents built and ready, that architect's ready to go on that front. working on that, and that will mean towards the end of Q3 or so of 2023, we should be able to break ground. And that means moving dirt, that means installing infrastructure like water, sewer, power, and then eventually going vertical. So really excited about that. A little bit about our team. You can always reach out to us on our website to talk about who we are, what we are. But myself, Mike, Michael, Mark, and Amy Cooper, a vast amount of experience in the value add space, but also international sales, property management, of course, and executive leadership. Our key developer is Brock Danielson. He's brought 30 plus years of experience to the table, $2 billion worth of development, redevelopment work in that time frame. And that's just some high level pieces, 4.5 million square feet of office developed, 13 divisions, subdivisions, over 6,000 units developed as well in that time frame, and 9 storage units. I'll show you guys a couple of different projects that he's done here, but these are some ground up projects across the country, but I've tried to focus just on the ones here in Arizona. But he has also done some in the Midwest. Ground up self-storage, value add apartments. These are just a few here, and many of those also in the Midwest, and then ground up office. So a vast amount of experience in the development space. And you really need that in order to do a project like this, because there's so many nuances to working with the city, obviously working with contractors, contracts, and being able to jump over the hurdles that are going to come at you in this type of project. So we're really excited to have Brock on the team. Our key sponsor, Eric Stewart, he's our partner in multiple projects as well. He's going to help us secure the debt and be able to get the best piece of debt that we can on this project. And so Eric's with Atlantic Business Capital Group, and he's CEO of that firm, which is a loan brokerage firm, but he's also an investor. So we're really excited to have Eric on this project. Trade partners. Our general partnership team is very strong, but we can't build a project ourselves. We've got to have some good trades. So these are for the few folks we've already worked with over the last, again, 9 months or so. And as we engage the general contractor, we'll add sub-trades to this list and heavily lean on the GC, of course, to get this project built out. And I'll talk a little bit more about some of these folks here. But most importantly, CALCAP. CALCAP is our property management team that already manages properties for us in New Mexico. And so we're excited to bring them onto this project as we lease up. So the goal is, as we finish the project, we get marketing efforts in place by CALCAP, and they work to attract those tenants, get the project leased up. And so that gets it prepped for sale, which is what our expectation is between year 3 and year 3.5, is to lease up the asset, build it, lease it, sell it. And so this is, we chose CALCAP. They have a tremendous amount of experience in this space, but they also manage 6,000 plus multifamily units across the country with a vast amount of experience just here in Arizona. So super excited to be working with them. Let's talk a little bit about what's happening in Casa Grande. This has become, again, a little bit of an innovation and tech corridor now. It's right at the cusp of I-8 and I-10, so it connects California, goes out east to New Mexico and into Texas, of course, very close to the port of entry. You have the rail service, and I'll talk about some of those companies that really chose strategically why they wanted to be there. And of course, it's close to a couple of different airports. So great location. And again, I mentioned previously, it was only really focused on suburban neighborhoods, but now because of all of the activity, it's been a booming area from population growth. So you can see it actually hit number 7 in the country as far as cities over 50,000 population, 6.2% population growth just in the last year. So really excited to see that happening, because what that means is there's been a major constraint on housing as it is. There'll be even more constraint, which means our product will have a lot of demand in it, which is exactly what we want. Also great to see is the median income has jumped significantly because of some of those jobs that have moved in, and it's only expected to grow as they add 4,000 to 5,000 more high-paying jobs in this area. Let's talk a little bit about the industry. So as I mentioned, a little bit about tech, advanced manufacturing. So Lucid Motors is on the next slide, but these are some of the companies that have already been there. But Kohler is setting up a $500 million facility. P&G, or Procter & Gamble, is setting up a manufacturing plant in the city of Coolidge, which is just next door on the other side of the highway. Kanto, CCP, and Solvay are companies that support the chip industry. So if you're not familiar with TSMC, Taiwanese semiconductor company, they're building a $40 billion manufacturing plant. It's the first U.S. chip making plant coming over from Taiwan. And so what you have is you have suppliers that need to supply these chip plants. So they all have bought land in Casa Grande. set up shop, building facilities as we speak. So we're talking hundreds of jobs there, along with the existing employment that's in place. So we're really excited about to see that. And so this is the slide I was talking about, TSMC, Greenfield project, first North American plant. Intel is just 20 minutes away from Casa Grande, 20 minutes away from our project site. They've been in Phoenix in this area for the last 40 years. However, they have a $20 billion expansion where they're adding on a new plant, chip making facility to that area. So 35 minutes north of Villas, not 20 minutes, 35 minutes. So really close here. This is just a little bit north of the area, but again, all the jobs and where people will work will be in the Phoenix area, and all those suppliers are now looking to target Casa Grande as a location. Galactic, which is Virgin Galactic, they're going to be building spaceships, which is pretty exciting to hear, just in the Mesa area, 45 minutes north of the Villa site. So again, as we have constraint for housing in the southeast valley of Phoenix, Casa Grande is ripe to have a massive demand for multifamily housing as well as single family housing. All right, let's look at Lucid Motors. So again, most exciting piece here. If you haven't heard of Lucid Motors, please look them up, lucidmotors.com. They're an electric vehicle company. Essentially what we like to think about is when Tesla built their Gigafactory in Reno, Nevada, it completely changed the landscape of that market. And we see a very similar thing happening here with Lucid. They have actually produced cars in 2022. Just in Q4 of 22, they built and delivered 3,400 cars, 7,100, which is actually about 1,000 more than what they had originally projected. So great cars actually built out and then delivered, 4,300 cars. So they're on track to increase that significantly. If you look at their footprint, which is the most exciting piece, they originally built a 1 million square foot facility, which is this small building here. And right now they're doing 3 million square feet. So this building times 3 is what's being developed right now. They also bought an additional 1,300 acres just south of the area in order to further develop and have additional suppliers in and around their manufacturing plant. So it's a huge investment in the area. The estimated benefit in Casa Grande is about $32 billion over the next 20 years. So again, a huge economic hub of activity. And we're really excited to be there early on and capitalize on this great opportunity with population growth, income growth, and of course, the demand for housing. Let's talk about the investment opportunity. So our goal here is a 3 to 5 year hold. This investment has 2 classes, B1 and B2. And you can see the investment values are slightly different. So $75,000 for B2 and $150,000 for B1. There are a little bit difference in return. So the IRR, which is 24% for B2, 29% for B1, and equity multiple is slightly different. I'll talk about that in a little bit on the next slide of what the nuances are, but we're really just incenting the B1 class to come in with a higher investment amount, and that is capped at $4 million in order to not affect B2. So let's look at what does this mean. So if I come in at B1 with a $150,000 investment over the course of 3.5 years, as we lease up and sell the project, the investment is expected to project $195,000 of equity for that $150,000 equity investment. You get your original principal back. So those two together produce $345,000 or a 2.3x equity multiple. If you want to break that down, what does that mean? 29% IRR on a 36-month investment window, or 43% average annual return. This is probably the easier number to calculate for most of us actually, is just take your investment number that you get, your equity return, divide that by 3 years, and you can see the benefit that you get into your principal. On a 48-month projection, it's 33%. So these returns are well above what you would normally see in the stock market, and we believe these are actually very conservative returns based on the things I talked about earlier, and I'll continue to discuss why our underwriting is so conservative. Let's look at B2 investment class, which is a $75,000 investment, and so that's a combination of equity at sale, $90,000 of equity that you'd earn at sale, $75,000 original principal. Put those two together, it's $165,000 of total investment return, 2.2 equity multiple. That translates to about a 25% IRR, 40% average annual return at 3 years, 30% at 4 years. Our investor splits are 70-30. That means what we project at the exit is the split becomes 70% to you, the LP limited partner investor, 30% to us. That's our goal until we hit these targets. As we overachieve these targets, we do have an opportunity to change the splits to 50-50, but only once we achieve that 30% IRR for the B2 class. Another big benefit for investing in real estate, if you haven't heard about it, is cost segregation or depreciation study that we're going to do. What that means is at the sale, you will have an equity event. You will have a capital gains event of 90,000 if we use this piece. Our goal here is with this study is to project a cost savings or a shelter of about 50% of your investment. So just some examples here of the investment amount and what that shelter could be, which means you would reduce your tax burden because you're reducing the amount of actual capital gains by approximately 50%. Diving into the details about the project level returns and some assumptions we made. So a couple things I talked about at the very beginning is our exit cap rate, or what we use for valuation. We've increased that 100 basis points from where it is today. So today's untrended rate is about 3.5. We're using 4.5, 100 basis points in order to put our valuation right between $71 and $72 million, or about $414,000 per unit is our total cost, or total value at sale. Sources and uses, you can see here on the left, construction loan, investor LP. We did increase that a little bit and change our leverage point. So our total goal is about $18 million. Nimble Capital has already invested $1.6 million of our own equity into the project. So our total source is about $56 million. We're projecting about a 24-month construction schedule and then a lease-up period of 6 to 9 months. That puts us right at about 3 years. We do have that opportunity for plus or minus 3 to 6 months, which is why we did a 3 and 4 year projection. This is the breakdown. We have a land cost basis, hard costs, soft costs, which is our design fees and extra attorney fees, carrying costs, our developer fee, and the total uses. So $56 million is our cost basis. Again, we're looking to sell that at about 70 to 71 million and meet those investor returns that we project. A detailed overview of the construction budget. At this point, what we've received is a ROM, or rough order of magnitude. We do not have a hard bid yet from the contractors that we've isolated down to 1 or 2 now. And so as we progress into construction documents, our contractors will take those construction documents and put together a bid. And then we'll have the real detail there. But we've already built in contingencies, and we know we've been having regular conversations with the folks that are at the top of the list on what the overall project will come in at. Okay, sensitivity analysis. So it's really important in any kind of project to always look at other variables that could come up. I talked about cap rate and what that could do to projected returns. So 4.5 cap rate, we still have a 2.24x, as I showed you previously. But if cap rates expand, meaning values go down, inverse relationship, cap rates go up, values go down, it still has a strong position from a return standpoint, 1.78x. So our LPs are not impacted at this point, even if this is a worst case scenario, which is almost 1.5% increase over today's cap rate. We don't expect that to happen. We truly believe it'll be somewhere in this range or better. Income growth. I talked about 0% income growth. We've not expected anything to grow during the construction period. Expenses, if those also change, we don't expect that there. And then vacancy, if we have a higher vacancy. So all these factors do come in and impact the net operating income, which I'll show you here shortly. And we factored in some of these to make sure that we did all of the different layers of sensitivity. All right, quick breakdown of the unit types. We have 1, 2s, and 3s. You can see the square footage there. The majority of them, 50% will be 1 beds. And we just felt like that was the right dynamic. We checked with our property management companies, we actually checked with 2 or 3 to make sure we were building the right unit classes and the sizes of those units. There's a building breakdown. Let's talk about comps. So the challenge you'll see here in Casa Grande is that there's not very many existing large multifamily. There's quite a few of the 50 units and under, but anything over 100 units is really only like 5 or 6 properties. And so from a comp standpoint, because it hasn't seen the economic activity in the last 10, 15 years, nothing's been built new there. So our project, along with a few others, will be some new products coming out of the ground. And for some of you might think that's risky, but really what's happened is all these really old apartments have gotten tremendously busy, and they cannot keep these tenants. The occupancy is incredibly high, so really 100% full. So you can see some of the rates: 1,400 to 1,800 to 2,300 for a one-bedroom unit, 18 to 2,800 in the 2.2s. So these are rivaling single-family home rental prices, but that is what you'll see here. And the reason we believe most of these apartments are full is the folks don't want single-family homes. They still want the amenity packages. They want the pool without all the maintenance. So you're seeing more folks in this space. The high-tech jobs, by the way, that are in this area, and primarily through Lucid Motors, those are mostly 20-something-year-old folks. So they're young adults that aren't ready to buy a home or even rent a home. They prefer the apartment lifestyle. And that fits exactly what we're doing, so that's good. Again, another comp that's down the street, 14 to 2,100, 16 to 2,400, and 21 to 3,100. So our underwriting and our PM came in and told us exactly kind of where we needed to be from a 1, 2, and 3 bedroom standpoint. And I'll show you that here shortly. So again, what you saw just 2 slides ago was 20 to 25-year-old product. This is going to be brand new Class B product that we're going to target 1,850, 1,950, and 2,200. So our rent numbers are, we believe, right in line. We're not projecting any growth from today's rent all the way to when we start lease up. Now, we do expect 3 years from now that rents would go up. We haven't factored in that growth, but it could be somewhere around 2 to 3%. So that's another layer of conservatism that we baked in. Revenue projections, this is at lease up. So there's kind of 3 buckets here. If you're looking at the sales side, we're expecting total income to be about 4.1 million, effective gross about 4.5. Again, all of this information came from our property management company, CALCAP. They helped us build this pro forma to make sure that we were accurate in our projections. So standard occupancy costs, about $1 million in expenses. That gives our NOI at 3.5 million. And so the expense ratio is about 6,000 per door, which is right on track, and at 24% to gross income. Occupancy. Today's occupancy, this is right through September of 2022. It's the latest data that we had. 97% occupancy in the MSA. Some markets 97.7. Our comps, which is those 2 or 3 units that I showed you, is 98%. We are projecting 95. These are some of the projects that are currently underway. We have, as I mentioned previously, about 1,000 plus units, almost 1,200 plus units in some level of planning, but I didn't count those or put those on this presentation. These red dots that you see here are other projects in the area. So Florence Boulevard is down here. There's all the migration and activities happening up north in this area where you see kind of this empty space. These are all getting filled in. So there's our project here in the corner, another project here, another project here that could be coming. So these are actually underway, and the other, again, 1,200 or so could be underway. And we believe that's a good thing because that also means that there's other folks invested in the community, and they see all of the need and all the demand from those positions or those jobs that are moving in. So competition affecting occupancy. We don't see it. Today, 97%, almost 98% occupancy, and it's really holding steady, almost touching 100% occupancy. And so you don't really see that in any market. And the only reason that is because nothing else has been built there for so long. And all of a sudden now, in the last 2 years and going forward, you have thousands of jobs being brought into the city, high-paying jobs, which usually impact an additional layer of workforce housing needs or workforce folks. So, somewhere between 7,000 to 10,000 jobs could be brought into the area. 7,000 to 10,000 people could be brought into the area with only a few hundred units available. So our 176 unit is just a drop in the bucket. And that's a good thing because we do want to build more, but we know that there'll be strong demand for our project. Again, submarket stuff here. The rents I mentioned a little bit detail-wise, they project rents to continue to grow. This is just the average effective rent in the area. This is specific to our project in Casa Grande. Demographics, lots of data here, but this is where I want you to focus is, when we look and study markets, or you as an investor, if you're looking and studying markets, we want to see positive population growth. Usually we target anywhere between 1% to 2% population growth per year over a 10-year span. If you look here, the 5-year span of growth from a population standpoint is 9%. 9%, so 64 to 70,000 people. So that's the 6,000 just there. And this is about a year old. So this is not including some of those additional jobs that have been added on as Lucid expands their footprint, as Procter & Gamble expand their footprint, as Nikola expands their footprint, and as Kohler builds their facility. Those are another few hundred jobs, if not a few thousand jobs coming in. So again, tremendous growth, economic activity. And even if some of those don't come across, which could happen, there's still tremendous shortage of actual supply. All right. Last bit of demographic data. Again, we see median income significantly increasing. You guys can always dive into this. This deck will be available to you for review. This video hopefully will help you go through some of the information that may not be visible to you. And let's talk about again, this is average median income. It's on the path to growth, and so per capita, but also average median. So if you add this in the 5 mile radius, our area we saw $84,000. This is just within the 1 mile radius. That's another data point. So the two together still puts us in a very healthy position in demographic position. So the reason we wanted to share this piece is there isn't just one industry, there's multiple industries. You always want to have at least 2 different industries that are not correlated in case of a downturn or in case of there's layoffs. This has a very diverse group across Casa Grande. And again, a lot of folks coming out of Phoenix do live down there, but this is specific to the city, and we believe there's enough diversity to give us, again, more cushion in case of future downturns or a recession. Any questions, please reach out to myself, Mark, or Michael. Again, my information is there in the QR code. You can reach right out to me, and I appreciate everyone coming into the project, and we're looking forward to partnering with you. Thanks again.